Well, welcome everybody to today's webinar. We're about a minute away from starting. We have other people that are signing in, and we'll give them an opportunity, and then we'll go ahead and we will begin. With me today is Rich Lanza, data magician and ACL and data analytics expert, and he'll be presenting on using ACL analytics to audit the general ledger. Stand by. Well, I guess we should get started. If those other people are signing in, we'll let them sign in, but we'll go ahead and we'll begin now. Well, welcome everyone to using ACL analytics to audit the general ledger. My name is Jim Kaplan, founder of AuditNet, and with us today is my colleague and friend Rich Lanza, an ACL and audit software expert. This webinar represents a collaboration between AuditNet and AuditSoftware.net in delivering a training series focusing on audit software. Glad you could join us. I'll be moderating today's webinar. A little bit about myself. For those of you who don't know me, I'm the founder of AuditNet with a background as a CAE, Internet for Auditors pioneer, and an auditor who believes and promotes the use of technology for audit. Here's some information about myself, and the next slide provides you some information about AuditNet. Before we proceed to today's material and introducing our presenter, Rich Lanza, I'd like to go through a few important housekeeping items. The webinar is being recorded, and it is the property of AuditNet and AuditSoftware.net, so unauthorized usage or recording of this or of this webinar or any of its materials is strictly forbidden. We also will have an evaluation questionnaire that you'll be able to complete after the webinar, and please help us by completing that evaluation and help us to improve our webinars. The webinar today does qualify for CPE. We'll be putting up polling questions relating to the material covered in compliance with NASBA rules. The question period will remain open for about a minute, so it's important that you respond. Those answering the questions will receive their CPE certificate by email within 7 to 10 business days. Now, this is subject to availability of internet connections and everything else, so sometimes we may have a little flexibility there. We will take your questions during the webinar. Submit your questions via the chat window at the lower right-hand box on your screen. Simply type your question and press return to send it. Any question we're unable to answer by the end of the webinar will be answered directly within 48 hours. If you're having trouble with the GoToWebinar software, check to see if Java is enabled and whether you have any pop-up blockers disabled. If you're still not able to get the webinar to function, please log out and log back in again. If you can connect to the webinar in the audio portion but get kicked off at any time, just reconnect using the same steps you used at first. Thank you again for joining us. Without further ado, I'd like to turn the floor over to Rich Lanza to cover using ACL to audit the general ledger. Rich?
Great. Thanks a lot, Jim, and thanks again, everyone, for coming today. To have a nice little presentation. I've been auditing the general ledger probably about 17 or 18 years. I started out with ACL in the accounts payable area, but then quickly moved to the general ledger area because it seems to be the two areas, payables, general ledger, that I just constantly run into. Again, this is my background. Feel free to take a look at that. But getting to the learning objectives today, I wanted to give a sense. Actually, we have the wrong learning objectives up, and I do apologize. We're mainly going to be talking through going over planning data analytics in the general ledger area, and then kind of quickly here, we're going to move to these lists of tests that you're hopefully seeing now, the who, the what, the when, the where, the why. All of these questions we're going to answer with ACL reports, and I'll show you how to do that. And more specifically, as we get into ACL, some of the things that we'll do is a stratification by month and year, and then also taking a look at a unique journal entry test, and those will be a couple of things, as well as a wildcard search test. And that might be for wildcard searching for the word plug or net to zero, or things like that that show up in general ledgers, but it does show a potential sign of change in that system. So let me just kind of scroll back here to the first slide, which is this planning data analytics in the general ledger area. What I like to do whenever I'm working with an ACL audit or data analytic audit is to think about the audit objectives and then boil that down into audit questions and then have batches that answer those questions. And we're going to talk about those questions today, and here's kind of an example from my payables test set. I don't have a general ledger test set, so I don't have that, but looking at this, you can kind of see how ACL scripts are then aligned to the various audit objectives that you may have within a payables processing, but thinking about it as well as you think through your questions and thinking about the objectives for general ledger. What I try to summarize it out to is a query viewpoint, and what that shows you is a way to look at your data from a data mining point of view, which might be analyzing, say, stratification, statistics, summarizing it by month and year. That's more data mining, whereas querying is actual questions that you're going to ask. All of that, though, goes towards asking these questions. I mean, even if you're running a summarization by month and year, you are asking a lot of when questions, and if you start summarizing it by the stratification, now you're answering a lot of what questions. So, I like to use the journalistic type approach of who, what, when, where, and why when taking a look at my data analysis and making sure that I've covered all of those areas in this. So moving on here, some of the summaries and data mining ideas, we just threw a few of them out there before we get into the query reporting. Again, just going back to this slide here, you can see the data mining component as the query component relates to all of the questions. The data mining part, I think you're generally summarizing things by personnel, by contextual summaries such as transaction types, and then time trending. And this can be interesting, especially things like looking at the last month of a general ledger versus the first 12 months, or maybe the 13th month, the month that falls into the next period. Transactions, obviously, at the end of the year, beginning of the year. These are all things to really think about in any audit, but especially in a general ledger audit, given the year-end crunch that always tends to happen. And then, moving onward, taking a look at how to graph that. ACL may not be your best bet for graphing. I mean, it's something where it isn't a bad tool for graphing, but it isn't extremely good either. Doing something like this, you would need Excel at least, because that's going to give you more of a stacked column, which you can kind of analyze. And I'm trying to think here, this is a monthly spend type, which you may be interested in. But this could also be a stratification of activity, month and year, and looking for kind of large periods of time. We're going to show you how to do all this in ACL today. Might have a little bit of time to jump into Excel, but again, just wanted to show you that a lot of the graphing capabilities of Excel can really help in any sort of data mining you're doing, because when you start looking at those summaries of data, it gets a little hard to differentiate the trends. The other thing that I wanted to bring up today, and before we get into the query questions, is I like to transactionally score information. So if it is an accounts payable, I'm going to transactionally score a payment. If it is a general ledger, I'm probably going to transactionally score the journal entry that's being posted. And I find that the questions, be it some of the data mining you can do this with, but I think the queries are where this really kind of comes into its own. And building a transactional score around those queries so that you can find those journal entries that show up on the most reports. So in a transactional score, you're giving a single score to that transaction or to a journal entry based on the number of reports that it meets. And you could summarize it by entered, by department. You can scattergraph that final activity, even look at it by, say, business unit. If you wanted to figure out where you're auditing this year, you could summarize it. And you're mostly looking for the volume and the values that are major changes. And also then sampling But usually what I do is I sample in a variety of the quadrants of, let's say high score, high amount, medium score, high amount. Probably the low score, low amount, I think is probably a quadrant that you might want to pick a couple from, but it's not a critical need. The nice thing about transactional scoring is that you are now sampling based on how you perceive risk and how you mathematically calculate risk based on the number of queries that are coming up. So I think, again, it's more of my own opinion, but it just logically makes sense to me, and hopefully it does to you as well, that the goal here is not just to run one report, but many. And then summarize those reports by perspective: who, when, where. What you can do is, and this gives you an idea of the different types of who and where and time frame when, what, the dollar magnitude, the growth rate, and kind of why is more, again, I think that the score, the risk level. So the what is more dollars, time, where, when, and who is more or less what you're then summarizing on. And that kind of brings us back to that data cube that you can see there, that those are the three that really make the most sense from a summarization and cube point of view. All right, so without further ado, and I've shown these before in other webinars as kind of a good example, but I still stand by them. They're pretty good. They may not be the best, but they're pretty good general ledger journal entry testing that you can do. And doing things like summarizing journal entries by enterer, taking a look for unique and the repetitive journal entries, extracting manual journal entries, which are ones that have more of a higher likelihood of being a bit of an issue, stratifying the size of journal entry amount, summarizing general ledger activity on the amount field itself so that you could take a look at from a Benford law point of view, and then scattergraphing some of those transactions as well. We may not have time for all of this today, but we're going to show you quite a bit of how to do every one of these tests. From a when point of view, taking a look at holidays and weekends, although I find that this test sounds good in theory, but most accounting departments work holidays and weekends, especially in crunch time. However, you can take a look at, let's say, weekends that are more mid-month and are less of a crunch from a year-end point of view or quarter-end point of view. So why do you have a lot of activity there? Taking a look at prior year to the previous fiscal year and summarizing by the actual day, month, and year, taking a look at when these transactions happen. I find the day graph is really useful. I usually do a summary and then put it into Excel, and you'll just invariably have a day here or there that just jumps out of the norm. So that's quite interesting as well. Then from a where point of view, we're then taking a look at where are these items posting in the general ledger. Is it happening in suspense accounts, and here's a great one, looking at accounts that are problematic or complex based on previous year audits. I can't tell you how many companies do not track that. And I think any sort of kind of error tracking, or we used to call it in auditing the permanent file. So you have the permanent file for a client and then the audit records for each year or quarter. And this is like good permanent file stuff that is evergreen. It just seems to always come up in audits. Again, can't tell you how many companies don't track that, but it would be very useful. Then maybe taking a look at just kind of some stranger where activity like debits and revenue. You might even have things like debits within the fixed asset area that don't relate to fixed assets. So it could be credit, revenue, debit, fixed asset as an example. So taking a look for fixed asset increases that are not related to purchases or any sort of construction activity. And there's a host of things like that. So something to consider. I usually, what we don't have here, but I want to note in the where section, is taking a look for revenue entries that don't have an offset to accounts receivable or cash. So again, normally you have your revenue, you put it into receivables, or you got some cash and you put it to, but anything else is going to be more, I guess, a deferred revenue or who knows? So, these are things that you want to kind of look at and try to understand things that fall outside of the norm from a where are they being posted in the general ledger. And last but not least, I kind of threw into the why section here a bunch of reports that are just strange. Why is this happening? I mean, you could argue that, going back to my theory from before on the scoring model, that the who, the when, and the where are some query reports that you can focus on. The what is more of, again, the dollar amounts that are being kind of worked on, and the why is more of the just overall score that you could calculate from all of these other reports looking weird. So the why doesn't have to be these kind of weird reports. I just didn't know where to put them, like journal entries that are round multiples. I guess that could go into the what section because it relates to amounts, but it just felt like why was a better place to put it. So just trying to explain some of the logic of building this thing, and taking a look at the why, taking a look for accounts that are above average, accounts that basically have journal entries that end in round multiples. I think even looking for accounts that have round multiple final balances. If you got a trial balance and ran just everything that has a final balance that's a round multiple, it's very interesting. I mean, there's usually a lot of equity accounts that fall into that category, but it is interesting to see what liabilities are out there, or assets, especially assets that are out there that just have some round number to them. Taking a look at key texts such as plug, net to zero, we're going to show you a script that actually does that for you, and you can build a table of all of these words, and ACL will actually go through the table one by one and methodically knock them off. Then taking a look at entries below approval limits, so that's kind of weird, and then entries that don't net to zero. This happens a lot more than you think. The rationale, though, as to why this happens is probably a little bit different than what you're expecting. What I find is that when they don't net to zero, you're more or less dealing with an entry where you don't have the entire general ledger. So you might just be looking at the manual journal entries, for example, and if you could believe this, there's some manual journal entries out there that have almost like a half manual, half automated portion to them, so it doesn't show up. Or it might be business units that you don't have. So you have all business units except business unit 999, because that's more of a strange business unit. Once again, that would be a category where you could take a look at the data that you have, but you have to remember you're missing some of these business units. But I do find it's interesting, out of most general ledgers, the netting to zero journal entries is maybe just one or two, and then there are other situations where the netting to zero journal entry can be thousands if you're missing some of these other business units. So I wanted to jump into our first polling question. Just launch that. And what is an example of a what question in the general ledger analytic test? And apologize, just having a tough time reading it. Extracting all round dollar journal entries, identifying weekend journal entries, summarizing entry by account type, and summarizing by who entered the journal entry. So which one is a what question? Now for NASBA compliance, we need to have everybody answer these questions, and do appreciate you voting. We have about half of you voted, so we'll just hang tight here for the rest of you. Okay, and I believe everybody has voted, so I'm just going to close that. And I will share that with everyone. And summarizing by accounting type, yes, that is the correct answer. And give me 1 second here. That is the correct answer, and yes, we'll continue on here with the presentation. Just have to show my screen again. Okay, great. So bear with me one more second, everybody. Okay, so completing tests in ACL. So what I wanted to do now is go back to that list of questions, open up an ACL data file, and just kind of one by one knocking off as many of these as I can in a time frame. And once we're done with almost every one, if not all of these, what we'll then do is basically go through some more complex ones. So the ones we're going to do later are the unique and repetitive journal entry one, the stratification, which we'll do differently, and bear with me, and then the next one is the extract journal entry with key text in there as well. So what we'll do is first off go through kind of these who and what and where, and then why, and we'll have a polling question probably in the middle there, just to kind of break it up a little bit. So let me continue on here. One thing I wanted to note is if there are any questions as you go through this today, feel free to post those questions to me, and we can, answer any questions definitely at each one of these polling breaks, if at all. So looking forward to that. Okay, so I have a couple of general ledger files. They're not the best data files, I will admit that, but it's kind of hard to give out actual general ledger files. But this one has 110,000 records in it, so that's kind of good. We can play around with that one a little bit more than normal. The only problem is I don't have a date on this one. So one way that we could do this right now and kind of show you something is to add a date. And we'll kind of give this a whirl here. If I go to the table layout, we can add date, and in the default value here, what I'll do is I'll just put in 2000, let's say 2011 and 0101. Have a different, sorry about that, can't type here. And that'll be kind of a default date. And then we'll set a condition here that basically says if the record number is less than 55,000, because that's kind of halfway through the file, the value will, in that case, be 2012 0101. And just giving us a little bit of a date range to work with. Nothing too, hopefully that worked. Let's give that a try if my logic worked okay. So anything less than is 2012, anything more than 55,000 is 2011. Great. Okay. So now that I have that, we can do a little bit more kind of time testing, which probably will be useful for some of the work that we're doing. And okay, so let's continue on here. One of the first tests I had was summarizing items by enterer of the actual general ledger journal entry. Because I can't show you that, I want to just show you the summarization on a different field. In this case, I'm just going to take the journal entry number, and we'll accumulate based on debit and credit. So just a good old summarize command. We can do JESUM, and what that'll do is create a file called JESUM that has each journal entry summarized with the debit and credit detail posted there as well. Okay, so then that kind of answers how to do more of a summary for those that had any questions about that. The next one we had was the repetitive one entry, but from another report that also may play into this is taking a look from manual journal entries. All that would be is either extracting out or summarizing, kind of like the summarization we did here, if a certain type is set to manual. So if, a lot of times manual journal entries are called spreadsheet because people upload a spreadsheet, so there'll be a type here called spreadsheet. I don't have this in my data, but just trying to give you some idea of how to do that one. The stratifying we're going to skip over because we're going to do that in a little bit. But now, let's say we wanted to summarize on the amount field. So right now I have a debit and a credit field. And actually the combination, it's either, debit has value and then the credit is 0 or vice versa. What we can do is, really try to create a calculated field for that that puts it into one section. But also I need to create a calculated field because ACL doesn't like to summarize things on amount fields. So, basically numeric fields. So we have to kind of turn it into a character field anyway. So I'm going to call it Benford invoice amount, and maybe it's not so much a Benford, but let's give it a try here. And what I'll do is I will say, in this case, we're either going to create a string of the GL credit amount, and just bear with me one second. I just have to check my settings, which I think I can actually do right here. Good. So we're going to create a string of the GL credit amount, comma. In this case, we'll make it 16 characters of a field, and I'm going to alt trim that, really just to basically bring that all the way over to the left. I'm going to copy that section. So we're just alt trimming the GL credit amount. But then we're going to say down here, if the GL credit amount equals 0, oops, then what we'll do in the value section, instead of making it the credit amount, we're going to make it the debit amount because it was either debit 0 or credit 0. So that is a way to create a string version of each of those fields. And let's add that right here. And we'll call it Benford GL amount. So I've done a couple of things there. I mean, I've combined it into one field, but I've also created a string version of that field. And note, we still have the debit and credit, so it still kind of works out. I can then, I guess I could perform a Benford's analysis on the actual data, but I really want to summarize on that Benford GL amount, accumulate the debit and credit, and we'll just do this to a file called Benford amount sum. Okay, so now we have, out of the total population that we had before, we now have, and we know that we have 51,273 values. What's kind of interesting about this, and let's kind of blow this up just a little bit if I can. Maybe make that 12 font for everybody, is we can start to take a look at, again, out of 55, well, let's take the total count, I think was about 110,000. So we have 110,000 items. I could calculate a percentage over here and show you how to do that, so maybe we'll do that, but it's just kind of interesting to look at the amounts. The only difference or problem is they're not sorted in a high to low fashion. So normally what I'll do is kind of just right-click and say sort ascending, or better, sort descending. What's interesting, obviously, is the zeros that are showing up in this, be it in the debit or credit detail, is kind of interesting, and that truly is, there are zeros on kind of both sides of that coin there. Don't know why those entries are showing up. But then $500 or pounds or whatever it is shows up as well. 150 shows up. So you can see some of the larger items. What I like to do is find that break where, and there's other ways of doing this a lot more methodical than I am right now, but let's just say right here it breaks. And from this point forward, so from 19,774, there are some duplication of amounts that are showing up in the actual data itself. And it just might be, in this case, one debit and one credit that is showing up that's leading to that 99,000. which does make some sense as you look at the totals here. But down here you can start to see all of the ones that are showing up. And what you could do is filter to the ones. So here's a kind of a neat little test. And in this case, I don't think this is going to work too well for me. That didn't work too bad, but probably my only fear of doing this is because it's a text-based item. I never know if it's going to sort it right. So let me sort descending. Yes, it never really does. So that starts to put some of the larger one-time credits that are showing up in your data, which is kind of interesting. Why did we have $60 million posted once as a credit, and there is no debit accordingly? Like, it's not like they put it in and reversed it. Oh gosh, maybe there was. Sorry. So the debit amount here also is the 60, but I don't know if it was actually. I think it was a little bit different, but I could be. Let me just copy that. Yeah, it was off by 30 cents, so there was a difference. I mean, if it was the same amount, you would see it on both lines, but in this case, you can see this one is off by 30 cents, and the other one was not. Don't know why 30 cents on $600 million mattered, but I guess it did to somebody. So again, this gives you an idea of looking at some of the larger one-time debits and credits. What I would, take a look for, it's not so bad to have where, again, you have a debit and credit offsetting one another. That's so what, one of those. But in this case, I more or less am looking for items that are, let's say, greater than 50. And let's just do a count of that. How many are greater than 50? Wow, strangely, there's 50. But that's just a strange synchronicity there, where there are 50 items where the count is greater than 50 in the data itself. But again, taking a look here, just from a descending point of view, you can start to look for this. So as you could probably tell, I spend a decent amount of time on the amount calculations, because I find it's very interesting, especially some of these one-time credit amounts that you might have, as well as taking a look for ones that are showing up dramatically a lot, 200 times that certain values are showing up, and then working from there. Okay, so that one is spending some time there summarizing by the amount field itself. Now, from a scatter graph point of view, what does scatter graphing mean? This can be something that we can do somewhat quickly, but you do need to jump into Excel for it. So if I take this file and I summarize it, let me just make sure I get this right here. Let's summarize this by account number. And we basically, let's take a look right now at maybe just the debits themselves in this scenario. What you could then do is put the date field as more, I apologize, I picked the wrong command. I want to cross-tabulate. So based on the cross-tabulation, see, I can't cross-tabulate on a date, so that's a little bothersome. So we're going to have to edit that field. But what you can do, I think, more quickly than creating two summaries and joining them back together and doing all this analysis, we can take that date field and let's just kind of go in here and notice we have that add date field here. What I'm going to do is just create a new one called add date character, and that is going to be the date function of the add date field. And that's just the character rendition of it. And let's add that over here. And because I only know there's like 2 of them, it's not that hard to do this. So then let's give this a whirl here. We'll cross-tabulate on the add date character, journal entry account number. I mean, I guess I could do the debits and credits as one, but let me just do the debit amounts first, and I'm going to include the count, and I'm just going to do this to a scatter debits. Okay, so now what I have is for all debit amounts, I can start to look at the volumes and values for 2011 and 2012. If I took this and quickly exported this to Excel, account number, maybe put the counts together and put the amounts together in my export, and we'll just export that. Oops. And now that I'll open up that file in Excel. What you can do is create a differential. So let's just take the debits on their own, and then we could call this difference, and let's call this difference count. And this one is going to be difference, say, value. So what I can do is say, I mean, first off, it's interesting that we have an account number of blank. That's always interesting. But let's take 2012 minus 2011. And we'll copy that all the way down. Now, again, I could do this in ACL. It's a little bit easier once we're in Excel, which we had to go to anyway, to just kind of make a difference column of the values, 2012 to 11, and then the volumes, 2012 to 11. Okay. Now, I can highlight all of those differences. So now that I have them by account number, and I can insert a scatter graph. And it's just going to put that here. I'm going to right-click on that scatter and move the chart to its own spreadsheet or worksheet. So now that I have that, very quickly, you start to see items that, again, let's just go back. This is kind of the power of graphing that we talked about, where you can see trends that are kind of hard to see when you're just looking at this mess of data. Like, yeah, the 120 and the 130 and all that stuff looks kind of big. I could sort this data. Here's a 209, 539. That looks the worst, or more different, et cetera, et cetera. So now that I go to my chart, though, I can very quickly say, oh, here's the 120, here's the 209, and these items jump out like a sore thumb. But you can also start to see the values and volumes that are decreasing. What I find interesting is, for our quick example here, that everything is on the increase versus decrease, which is kind of interesting. But again, you could start to pinpoint maybe about 20 or so items, and you can see them right, if you can see my mouse, you should be able to see this, that allow you to very quickly get a sense of the major change between this year and last year by account and account activity. So that just took a couple of minutes. You could do that for the credits as well. What I find really interesting is if you do a debits graph and then a credits graph, and you could almost like lay them on top of one another, but I usually will just kind of scroll back and forth between the debits chart and the credits chart. You'll notice that a lot of these values are the same, and it's sort of the same accounts are having a lot more debit and credit activity. But again, it's just very interesting test. So that is the scatter graph, and that kind of concluded on the when and more of, or excuse me, the who and the what that we focused on. What I want to do is just launch our next question here. Let's try to bring that up here. And this one's a little bit off of exactly what we spoke of, but which audited objective below would be the most easily automated? Is it a written code of ethics? Does a company follow approval limits for invoice approvals? Do we have written procedures that exist to the process invoices? Or is the check stock safeguarded? Which one of these could we actually automate? And again, thinking through some of the when and the why and the who and the where questions, hopefully that'll help you to see that. Again, for NASBA compliance, we just need to maintain this. And since it looks like everyone has voted, let me close that poll and share that with you. And you're absolutely right. The approval limits would be the area that is the most easily automated because it is something that we could enter into an ACL script, and we'll talk about that in a second here as well. Just bear with me 1 second. I'm just hiding that. Oops, sorry about that. Sorry about that. Okay. Having a little trouble with my my mouse here. I apologize about this. Okay, so now we're back to the when and where testing, and how we're going to go through right now and go over some of the weekend and holidays, then also journal entries related to the prior year, and taking a look at dates there. Journal entry credits by month, day, and year. We've kind of done that, but we will show you how to do that in a stratification graph that's coming up. Extracting journal entries made to suspense accounts. That's something where, again, usually can get a list of those and work off of that list. Extracting journal entries to accounts that are problematic, and then last but not least, the debits and revenue, and taking a look at types of accounts. So kind of a when and where that we're going to take a look at here, and show you in ACL how you can run some of these tests. What I will do now is just move over to my ACL so that you can take a look at that. Just close that Excel. We don't need that anymore. So back to ACL here, and you should be seeing that now. Okay, so what we're going to continue and do is talk through these other areas. And from a when point of view, let me just open up my journal detail again. I find, there's a few different ways to do this. I do find it's kind of interesting. You can summarize on a date, but so that's one thing that you can do. But summarizing on an amount is not allowed. But a date you can, so you don't have to set up this character version of the date. Sometimes it is useful to do that. We're going to talk a little bit later on how to exactly do that with a function. Or a computed field in ACL, but what I'm kind of looking for right now is really just to be able to do that summary, and the reason I find it's kind of useful to summarize on, say, the date field and get your debits and credits, and just do this to more of a date. Maybe I'll even call it a day sum, because I'm summarizing on every day. Now again, we only had 2 of them in there, but when I go to my table layout, when you look at this date that we just summarized, it is still a date, but it has been converted to a year, month, day format. And it just seems like whenever ACL summarizes it, it puts it into a format that's just a lot easier to work with. What you could do is highlight those first 4 digits and say that it's ASCII, and you could call this the year field. And then what you could do is highlight, these 2012-01, month, day, year. So just these, I believe, is the month, the next 2 in that progression there. And we'll call this the month field. And now we have a month and year field that's been added. That, even though I know it's a lot harder to see it here, but then once because we only have 2 dates, we could add the month and year to this. And it is something where you're able to, now I'm just a little confused about why that's not coming through exactly. And I set them up as ASCII. It's kind of odd. All right. Well, and I know why, because I think I need to set them up as Unicode. So that might be my reasoning why. I am working on the Unicode version of ACL, which is a little bit trickier at times, and just doing this right now. But I believe because I'm in Unicode that you need to set it as Unicode, but that would be just my guess, and guessed right there. But for most of you, it would be ASCII that you would set that up as. Once you have those fields set up, these are now character renditions of the original date field. And now these can be summarized on in a month and year fashion. So usually what I'm doing if I'm just playing around with the ACL file is I will do more of a day sum to get to that daily summary, then create my month and year field that we just talked about, and then define it as either ASCII or Unicode. If you're using the Unicode version, you kind of have to go the Unicode route in that analysis. But that, I have to say that that kind of covers a lot of the actual, summaries by month and year and day and, all of that you could get. But if you graph this data, especially in a daily format, it's really remarkable what you can find, and how that scatter graph before showed how some things popped out. This even more so, shows you how things will pop out of the general ledger. Okay, so taking a look back at this journal detail file, extracting items that were just before prior year end. I mean, for the most part, you can do a filter, or function where you're filtering based on a date and saying, if the add date is greater than, or is less than, and then you could select whatever date you want using this date function with an ACL. So this date here, you could add whatever date, and that will work you through kind of items that are right before a period year end or right after a year end. The weekends and holidays, that one's a little more tricky, and what you can do is in your table layout, you could add a computed field. You could call it day of week, and in ACL you have a DOW or DOW, one, and we can actually change that and put the add date field in there. So now we have a day of week of the add date field, and let's now go here. So, oops. All right, so now that I've added that field here, it is a numeric field that calculates, and it's a numeric 1 through 7. And what's kind of interesting is because I guess January 1st, 2012 was a Sunday, and remarkably January 1, 2011 was the day before. It tends to happen that way because of the odd number of days, and maybe a leap year in there or something. That was basically the Saturday. So 1 is a Sunday, 7 is a Saturday, and everything else in between is in between. Now, I can't really summarize on this field, right? I mean, if I try to summarize on the day of week field, again, you can't summarize on a number, so you do have to go in, and if you want to summarize on the day of week, you could do one of two things. You could go back into this one that you just had, create a string field, and, I don't know, I could kind of create a 12-character field, let's just say. So it's a 12-character string field. And now that day of a week is more of a string, I can now classify on the day of week and see how many happened on each day. And again, this is really interesting. You might even want to cross-tabulate, and I know I don't have the data for this, but you could cross-tabulate where you're selecting maybe a journal entry number or an account number, or maybe who entered it. The who part is really interesting here. And then you could add the day of week to the columns, so you'll basically have, like 1 through 7 as your columns across the top. So let's just do this on account number, just for fun here. And we'll just do the credit amounts and include the count. And we'll just do this called day of week cross. And now I have, for each day of week that we had in the data, a summary of how much was posted to every account. So you might want to take a look at large postings, large dollar postings on weekends, but this gives you a nice summary. And I like to summarize this one by who entered it, because you can get a trend there of people that are coming in a lot or doing most of their activity on a weekend versus a weekday. Okay, continuing onward into the where exercise, having accounts such as, let me just go back to this one here, having general ledger account numbers that are suspense related or revenue related, or a lot of this you have to find out from your accounting department. So you're going to have to ask, where are the suspense accounts? Do the accounts start with a number 9 as an example, or what? What is the logic? And with revenue accounts, sometimes there are 4, sometimes there are 5. meaning that that's what they start with. You know, balance sheet accounts start with a 1 and a 2 and a 3 for assets and liabilities and equity in most systems, but don't take this as the norm. I would definitely ask. And a lot of that is really just then taking a look at extracting if the general ledger account number starts with that, you know, particular digit. So, I mean, a nice way to kind of bring it out is just to call it like GL account first digit. And what you want to do is take that account number field. I like to all trim it just to kind of bring everything over to the left. And then you could sub-function it for 1 character. So it's basically the sub-function starts at 1 and goes for 1 across, and that gives you a first digit of that account number. So a lot of times what I'll do is I will, you know, basically create the summary real quick and classify it and go to accounting and say, okay, I have GL account numbers with a 0, 1, 2, 3, 4, 5, 6, 7, 8, 9. You know, which one is the revenue, which one is the expense, you know, etc. Where are suspense accounts? Yeah, you know, they may start with a 0, for example. But that's something where I think just doing that summary and then going to accounting and getting their feedback can give you a lot of information about how to extract journal entries that are either problematic or suspense related or related to revenue or what have you. So a lot of different items there. And I think, you know, for the most part, I think that kind of covers a lot of what I wanted to talk through. Oh, actually, no, I do have one more set. Let me just go back to my slides here, and we'll talk about some of the why reports that you could run. And we'll talk about, you know, exceeding an average is a good one, round multiples. We're going to skip over that one about the plug and net to 0 because we're going to do that in a few minutes. Looking at things that are not netting to 0 and even maybe under approval limits, all of that is pretty easy to do. So let's kind of quickly show you each one of those as well. Okay, so what I, you know, like to take a look at are, you know, how do you create, let me just go back to my journal detail file here, and let's just summarize this journal detail file based on account number. And we'll summarize, say, the debits and the credits in there. And we'll create this output file called GL account sum, if I don't have one of those already. Okay, so now we have the summary of the debits and credits with account. One thing that you can do, and this isn't that hard to do, is go back to your table layout, and in this case we're going to create a calculated field, which maybe we'll just call it in this case, you know, average debit. Another way you could do it is we could just call it average debit credit, and this would be both. What we would then, you know, in this case, you could either kind of add the two together, add the debits and the credits, you know, so we could do this. We could take the debit amount plus the credit amount. So that's the average debit and credit. And then we could divide that by the particular count. And the count field was provided. You can decide if you'd like to. I mean, a lot of times I'll add, you know, maybe have this go out to like 3 decimal places. So I'll multiply both the numerator and denominator by the 3-digit item there. And that gives us like an average debit or credit value. Now that you have that value, it's really not that hard. You know, again, just it's more of like a simple averaging of everything that might be in there. You might want to just do it on the debits and the credits separately, but this isn't a terrible way of doing it either. Then what you could do is going back to the journal detail file, you can then join based on account number to that GL account sum. So we could join on the account number here, and then bring over that average debit and credit amount. And when that, I guess we just do this real quickly here. Just bring this over. I'm going to include all primary just in case, but we'll just call this join for right now. It's just a simple test, and really then just showing you in as quick as we can, kind of for each account that is showing up here. This is account 1. What is the average debit and credit added together, divided by the total count, and how do these debits and credits relate to that? And in most cases, a lot of them are, the average is actually, pretty good. So you might want to take the average and multiply this average by like 3. So you could create a new field and say, average by 3, and in my default value here, what I can do is take the average debit credit, multiply by 3, and away we go. So these are ways to kind of use a average amount in relation to your current values, and just find certain values in each account that look strange. You might want to try doing a standard deviation of each account, but that one's a little harder to do. I mean, it's something where you need to loop through and calculate for each account the standard deviation. So I'm going to skip over that one for right now. Let's go back to the journal detail file. Another thing that we were kind of looking at in some of the whys here is just taking this. I think actually, we created this already. It is called the GL sum table here, where we just summarize the debits and credits. Well, a really simple test that you could do is just say, where do the debits not equal the credits? Just curious. And okay, it's off by 2 pennies, by 1 penny, etc. Let's kind of change that then and say, okay, let's take the maybe the absolute value of the debits minus credits does not equal, and let's kind of put in here is, the absolute value of the debit minus credits is greater than $1. So now we're looking at things that is greater than $1, and there's really nothing. So now let's say it's less than $1, and let's just do this one more time, and we'll put an AND statement. It's greater than 0. So we have all these items that have like $1 off, so 68, 70, etc. And from an account point of view, there's only probably about 293 out of the 11,000 journal entries, but it's all under $1. So we'll spot them $1. There's no sense in spending a lot of time on that, and we'll kind of move on to the next test. From a journal entry point of view, I guess you could pick either the debit or the credit field. One last thing that you might want to look at is the mod function. So the mod function will divide that amount by, and let's put in here, say 10,000. And if that mod of 10,000 equals 0.00, let's take a look at those items. Now, okay, I do have a 0 amount here. Why don't we quick filter and say and not equal to 0? So now I have every journal entry where the debit amount is around 10,000. So it's rounded to 10,000. There's only a few. There's probably about 20 or 30 entries where that is true, and that is a very small number in relation to everything. So again, that gives you a way of very quickly identifying the round items is really just to mod, comma 10,000 equal to 00, but excluding anything where it is already equal to 0, because ACL will kind of view that as also like a rounded by 10,000. I guess when it divides 0 by 10,000, it ends up with 0 because it's not a division by 0, but it's still 0 is the answer. So okay, so that I think covers every one of these tests except for about 3 of them that we're going to talk about momentarily. But in the meantime, let me share with you this next poll. Which function is mainly used to find round values? Is it the mod function, the find, the mid, or the VLOOKUP? And I may have closed this poll, so you know what? I'm going to have to skip over it because I believe I mistakenly closed it. and I think you're just looking at the poll results at this point. So unfortunately, I will kind of spot you on that one there and move on to the next set of testing here. Give me 1 second. And again, I don't see any questions coming through, but if anyone has any questions, feel free to post those questions. We're happy to work with you on any of that. But what I wanted to talk about now, oops. Having trouble finding my presentation. There it is. So, okay, we just went over this one. Which audit objective is most easily automated? Let's skip over that. And what we're going to do is now go into the stratification by month and year. And I really, just taking a look at the code in ACL that we will be providing you, so you don't have to worry about this. What it does is it not only kind of stratifies by month and year, but also relates year 1 to year 2. And I'm a real big believer by even doing it by like month and year, because it's really interesting to see in a given month and year where it's sort of outside of the norm to have like a over $20 million posting in that general ledger area. So bear with me 1 second here. I just need to switch over. And again, if there's any questions, feel free to post them, and we will definitely answer those for you. Okay, so I'll be starting this momentarily. Sorry, everyone. Okay, so the stratification by month, the code there, which is given to you for those who paid today, is right here, and that is going to be the codes that you can actually type in, or you can just copy and paste it. And I'd suggest copying and pasting it. It took a little while to type up, but what this does is it gives you an ability to calculate the stratification into any data set. So the only field that you really need is that VIH account that you see there, and with that VIH account listed, or account amount, excuse me, you're able to then calculate a stratification range for the entire data set. So now moving on, we're just taking a look. What we're then going to do is stratify data to a file for annual comparisons, and that's something where we're first going to do the stratification, and then we're going to do another type of calculated field that takes the results of that stratification and builds a bit of I guess a stratified range again. But again, the difference here is on this first one, this one is based on the actual data in the file, the raw data in the file. This one is based on the actual stratification that you calculate using ACL. So we'll talk through both of those for you to take a look at, and then we'll pause for another break. And again, if you have any questions along the way, just let us know. So again, just to make this easier on everyone, I'm just going to close that table here and close that there. Sure. What we have here are a couple of tables that we can run this on. I'm just trying to think here what's probably the best. I think the ACL Benford's is probably the best, but let me just take a look at how I set this up in my script. So taking a look at the actual script here, the stratify all records file, this is actually using my Benford's Law table again. So, okay, so the script is down below here. It's called strata for a file, and what we're doing here is we're just kind of taking that ACL Benford's file, again, you could change it to whatever you'd like. And that amount field, again, change it to whatever you'd like. We're calculating a stratify range, which is this calculated field, and we'll talk about that in a second. And then we extract the fields from that file to a new one called stratify all recs. And the reason I do this, and we talked about this before, is I want to solidify that calculated field here into an actual file. And also, I really don't want to, keep anything hanging out there in my original data file. So this is a way of kind of taking the original data file and converting it into more of a stratified data file, and then, being able to work with that. Okay, so let's talk through. I'm going to get rid of what ACL now has is word wrap in the scripting, but I'm just going to get rid of that for a second, and I think we'll be able to read this. So, okay, what you want to do whenever you create a computed field in ACL, what you want to do is put a couple of carriage returns. So notice there's a carriage return here, there's another carriage return there. So there's two carriage returns in between the stratify range and the start of the next, I guess the condition that you have down below. So what this is going to do is it's going to look at that amount field. Again, that variable with the percentage marks was set up here as a variable. That variable, when the amount is less than, I think that's 10 million, we're going to put under 10 million in a field. When it's greater than negative 10 million and less than a negative 5 million, we put that in, and et cetera, et cetera. And it kind of walks through all of these conditions. Now, as ACL goes through these conditions, if it finds one that works, it stops. If it does not find anything, it then puts in blank. So I guess if you have some bad data in there, everything should fall mathematically into one of these sections. But if it doesn't, you can, it just kind of puts up that zero or blanks at the end. Then it's going to extract all the fields to a new file. So let's kind of now work with this. Let me go back to here. I'm going to strata for a file. I'm going to run that. And okay, I have my original table. Nothing changed, just like we talked about, but the stratify all recs is now developed. And notice here that stratify range 100 to 499. Let me just change the font here. Maybe you can read this a little bit better. Okay. So right now we now have the 100 to 499 is 197, right? So all of this seems to work really nicely, and that stratify range is now placed right into ACL for our analysis. Notice too, I put in here in that range, 10, 11, 12. Let me just try to sort this ascending downwards. Again, it should be sorted in because I put the 04, 05, 06. Everything should sort properly, and again, that's kind of nice. So that's there. Now that I have that, let's say I wanted to take a look at the stratify range by time frame. One of the things that I could do, you can do a variety of things at this point. You could summarize on the stratify range and supplier, the stratify range and enter, and you then get an enter stratify report, based on that. This is like a quick way to do this without even using the stratify command. But what I really like to do, and I'm just going to go into my table layout and take a look at my entered date. Notice I have that date function there. What I'm going to do is I'm just going to check a couple of things here. Bear with me one second. Yep. Okay. So I'm going to go into my table layout, and I am going to redefine or better, split this data. So a couple of ways I can do that is I can add a new expression, and I can say, let's just put entered year. And what I'll do is I'll use the date function, which will convert the enter date to a character formatted date. And in the, let's kind of do that. I know that when it does that, it's going to, let's take a look at that actually. Let's see how does that result when you do that. So let's close all this out and then go into our enter date column here and bring over the entered year column. Notice we have 7/14/2008 listed as the date function. The reason I know that that's how it's going to be listed was my options of the date options of ACL were set to month, day, and year, and therefore that's how it's set up. Because I know that, because I have that in my mind, I can now take that entered year field and say, well, that's not really the entered year. It really was the entire, data. I can actually do a split function, and I can say, let's split it at the, I guess the slash mark, and we're going to split it with the third item being listed out, and that's probably just good enough at this point. I could substring it if I wanted to, but I think that's okay. So let's close that. So now, take a look. Now we have the entered year as a field that we can now work off of. Now, if I want to get a little crazy, I can, instead of changing it to year, I can call it month year, and I can then copy this. I can add a little, maybe dash mark in between, plus, and I can then say I want the kind of what is in the first position of that split, which would be the month, and then what is in the third position of the split, which is the year. You can kind of save that. Creates a pretty large computed field, but let's take a look at how that looks. Let's see. So, let's see, I'm going to add that entered month year field in now, and it looks pretty good. It's something where I think it's workable for today. We might be able to all trim it and substring it and make it look a little bit better, but yeah, that's pretty good. Okay, so why did I do that? What I now want to do is create a crosstab report. And the crosstab report, I find, is kind of cool when you do it on the entered month and year. You could just put the count in there. You could put the amount. I like to use the count because I think it's more interesting. We can then stratify, select that stratify range, which we had from before, and let's put this to a new file called, cross strata month year. Just take a second or two. Yeah, it wasn't that long. And now what I have is the count by month and year of all of these strata. So that was a kind of an interesting way to take a look at this. And while it's a little bit beyond our time today and what we should be focusing on, if you put this into Excel, this can be a really nice graph. And what I find interesting is how the data ramped up. Like, I wonder if we didn't have a full month in 2008 because the numbers here look quite low. But then as you get into 2008 February, you notice a few items showing up. And actually the data is very consistent as you go across year after year, but there are some drops and additions in certain months. And I do find that even though you can eyeball this stuff and maybe find it, I find by graphing this stuff and putting every one of these into a bit of a line graph, the strata here, which again it's sorted nicely from low to high because of that 04 to 15 that's listed there, you're able to very, very quickly identify where there are months and years, where there are data points or transactions that are just out of line in relation to previous years. Okay, so let me kind of continue on with another script that I've written for you that kind of takes that strata for a file concept and goes one step further, but this time it's a little bit different. What we're going to do is we're actually going to stratify to a table in ACL, and that stratified to a table, I almost want to break the script at this point just so that you can kind of see it. Just maybe I'll do that, and then I'll define that field, and I don't even know if we need that stratify order, but we'll keep that in there, and we'll break it at this point of the script. So let me just show you kind of what's happening here. Now that you kind of get the concept of building this. Okay, so when I do a stratify to a file, and that's where we go stratify, and in the output you actually select an ACL table. The stratify command, when it creates a stratify function, it's kind of odd. It creates a field called whatever you had in your data. So in the Benford's data, we had a field called amount. So now in that stratification file, which I'm embarrassed to say I forget which one it was called here, I guess sum in the last 12 months, is that it? Yep. So here is the stratification. Now what it does here is it actually puts in the lowest amount as the limit, or excuse me, the highest amount as the limit of that value. So in this case, 5 million. Notice here 5 million and above or below that a point. This one, it's easier. It's easier looking at the 100. The 100 being 0 to 99 is a positive. The 500 being 100 to 499. The 1,000 being 500 to 99999. The negatives are a little harder to explain it that way, but it is working under the same premise that 5 million is the highest amount. Negative 5 million is just working kind of backwards, so it's a little weird. Anyway, with that said, that is the amount field, which then drives a stratify range calculation that I've put into the script. And just remembering the two different slides that we had, the one slide kind of talked about creating stratification where you work off of the amount fields, and then you had this other stratification calculation that worked off of that amount field. So I'm actually looking at the amount field and saying, is it negative 10 million? Then it's stuff that's under negative 10 million. Is it negative 5 million? Then it's stuff that is between negative 10 million and negative 5 million, and so on and so forth through the stratification. Okay, so let me get rid of, now that you kind of understand what this is doing, I actually am going to run this twice. So I'm going to run it for this year's data and the previous 12 months data, and I'm going to join those two files together. I won't save anything there. Okay, so let's kind of run that now, this year to last year, cross our fingers. Oh, I must have not gotten rid of the break. Sorry about that. I should have saved my changes. There we go. Get rid of that break. And we'll run that again. It's a nice thing about scripting, as much as you tend to build things, you can actually just rerun things very, very quickly, and for the most part get the right result, hopefully, in the next data run like we did here. So this is kind of giving you now a variance analysis, and it's combining a lot of the concepts that we've talked about today, but I think some of the main ones that are pertinent for this scripting is this conditional field where, again, you have to have a couple of carriage returns in between, and then you have your calculation and then the order, and then all I'm doing is kind of, once I've calculated those fields, I'm joining these files together so that we can actually create like a variance table and a percentage difference that we've talked about as well in other previous Benford Law discussions. So that kind of creates this stratify analysis that you can then take a look at. So what I like about this is that you can, let me just blow this up a little bit more just so you can see it hopefully a lot better. So if I have the value current year and the value last year, I mean, you could do it on the count as well, but I'm just doing it on the values. You can get a difference percentage here of, what is the difference? 48%, 43, 44%, 12%. But it really does show that some of these categories are really ramping up. I mean, especially in the million to 5 million category, the current 12 months to last 12 months has gone up by about 67%. I mean, that is really remarkable, something to go definitely take a look at. So I really like this report because it does give you an ability to very quickly identify those strata this year to last year that are strange. Now, it's not doing it in a total format, right? It's not just saying by supplier in this case or by, account number. It's just doing it on the amounts themselves. So it's a kind of a different way of looking at things and more statistical than anything else. Okay. The other thing that I then do, and I just have to think about my logic here a little bit, but it then calculated how many items were different from a very, very large different perspective. And I'm kind of hoping that million the million to 4 million notice here was also in that. We just talked about the million to 4 million ramping up. So what I then did was I went back to the original file and said, okay, extract anything that's over a certain percentage mark. And I just have to go back to my script to say, well, what did I set as that variable of what is unusual? Unusual is anything that's greater than 15%. Now, if I change that and say, well, that's a little too unrestricted. Let's make it anything greater than, let me make it 40% just to get a few more items in there than normal. I can run this again, right? There's nothing stopping me, but now I'm going to get anything that's over 40% greater in the unlikely. So the unlikely now becomes a lot smaller, goes from 40 to 66, but notice that one here, this was like 67% higher, that is being extracted. And what I like about this is even though I have the variance calculation here, I kind of go to that next step and I go back to the original data and calculate that stratify range for every data point and then join anything here that's over a certain amount back to the original data set and pull out any of those items that are over, say, 67%. So my suggestion to you, a lot here that we're trying to bring across, and a lot of code here that obviously you can kind of work with on your own. But notice all of these stratify range commands being calculated, the joins happening here. I definitely suggest you take a look at this code. But what's also really useful is that all you have to do to use this code is just update these 5 data points up here. What is the data file? What is the amount field you're working on? What's the date field that you're working on this year to last year? What's the last date in the file? And what is an unusual percentage? After that point, you can just sit back and relax and let the script kind of take care of everything else for you. Okay, so just wanted to jump into the next poll question here. What command is used to pivot table account postings, let's say by year and month? Is it the summarize, the duplicate, the crosstab, or the extract? So which one of those is the one that you can create a pivot table with? Summarize, duplicate, crosstab, or extract? Okay, so I believe everyone's voted at this point, so let me close that poll and share it. And you're absolutely right, the crosstab function is the function for creating that pivot table. And we're just going to basically give it one more second here. We're going to continue on and just close out the session talking about a couple of sections. One is on unique and repetitive journal entries, and then I will do a discussion about using a keyword script as well. So let me get what I wanted to do was create a set of scripts that would go together, and while I'm utilizing a file that's quite small, I tested this, and I will show you kind of the data on a much larger data set for your purposes. But I will admit, when we do send you the data, I just can't send you this particular one. But even though there's nothing really that personal in it, I just figure I'd rather not. And but with that said, the general ledger data that we have here just utilizes just a few different fields, and that's what the script will utilize. We have a journal entry number, an account number, a debit field, and a credit field. So that's all you need in order to run this test. And this script will run, I mean, for anybody. So if anyone wants to, not so much listen and learn, but really just run the script for themselves, you could do that after you watch what we're doing here today. But what I wanted to do prior to kind of running the actual script itself, which we'll walk through it. What I wanted to do is kind of show you some of the dialog boxes and then walk through the results that I've already run through this test on again, 110,000 record file. So we took 110,000 records and we then ran this test, and it ran in about 10 minutes, to complete, but I didn't want to waste our time today watching it spin. And what I did was I didn't delete all of the files kind of building up into this final set of table, so then that way you're able to go back to each, you're going to be able to see each step of the way here as we go through this today. And then again, though, the data file that you can utilize is this general ledger table that only has 44 records in it, mind you, but it still will work for your purposes. So let me walk you through what I had done, and starting off with the starter script. My ultimate goal is ultimately to get to a file called unique all sequences. And it's a little, hopefully this will, something I can impart on you or get the information across today. But one of the what you'll notice here is that for each journal entry listed here, maybe this is a better example to show you. For this, say, journal entry JE10708, it's on one line. There's a debit, and then there's these debit sequences that go out for, I believe we go out for 50. And then there's the credit sequence, 18926, and then that goes out for another 50. So what that is saying, based on what I'm looking at here, is that I have one account posting. It's in the debit, in the first position of the debit. So imagine, you'll see this entry in a second. The first position, we had 80901 as the account number. Then as I go over to the credit account position, there's 18926, and strangely enough, that's actually happening in two places, like there's two credits. So hopefully if I did this right, when I take a look at my journal entry, the journal detail, and let me just bear with me 1 second here. Yep. So 10708. Let me just make sure. I think I copied it, but I just want to make sure. So we'll go over to the journal detail. So just showing you some data management functions. I could kind of scroll down, or I can go to my data search and say locate if new journal entry number equals, and in quotes here I'm putting the JE10708, and sure enough it finds it. Now what we have here is two different, I guess we have the two credit postings and the two debit postings for this 10708. And when we summarize this table together, and this is kind of how we got these particular, to get to this particular answer. And you can kind of see here that this journal entry where you had a debit, I believe the debit of the debit of the 80911 and a credit of the 18926, this only happened once within the actual data set. So that this only happened once throughout the entire time frame of the data, which is really, in my opinion, interesting, and something to, again, to kind of note as we're going through this particular data set. And just going out here, so we have kind of the debits there, and then the unique credits. When we look at the 107, I think it was 10708. Let me just, here it is. So here's the 10708. We have the kind of the unique credits being listed for that particular account there as well. So we can filter through this as well, just to show it to you. So this is ultimately what we're trying to get to in our data file. Okay, so this unique all sequences, kind of the end of the day, what we're trying to boil this up to, I've basically created two files prior to this, which is a unique credits and a unique debits. And what I find really interesting is in the whole journal detail table that we have, there's only really one instance, or a few instances of these credits. We have 110,000 records, yet the unique debits there's only about 125 of them that are happening, and the unique credits, there's only about 396 of them. So it's something where when you really look at kind of the sequence of the credit numbers happening and the debit numbers happening, that these things are happening in this type of fashion, and I find that really interesting. Again, it kind of boils down your data quite a bit pretty quickly. But let's kind of walk through, what that function is doing and walk through each part of the script. And again, it's a very complex script, but something that hopefully you'll learn a lot of data management along the way. And one thing I wanted to also note is that we're not only using the data command, but we're also using the analyze commands as well. So we're going to utilize summarize and cross-tabulate. And while summarize and cross-tabulate are over here in the analyze feature, and I think we're even using duplicates, excuse me. What I find interesting is that in the, even though we're doing data manipulation today, we're still going to be utilizing these analyze features because it just, it's something where even though it's under the analyze command line or menu line, they're still very, very useful and something that totally relates to data management. Okay, so first off, it's going to ask you for, what is your journal entry testing table, and then second off, what it's going to do is ask you what fields do you need, and again, I said you only need really 4 fields to run this particular test. It's then going to open up the input file, and it's going to summarize in a pre-sort fashion, mind you, on journal entry number and account number. And it's going to create this thing called a sorted file. So that's this sorted file right here. So again, we kind of have a sorted file here. Let me just go back, bear with me, go back to my starter. And then it's going to summarize on the journal entry number and to a file called the sum file. Now, I have to note that what we're doing here is only for the debit transactions. So the sorted file will, first off, will only have the debit transactions, and then it'll go through the summarize command, and then it's going to kind of loop around as long as you're working with this particular journal entry number. Now, because we've already done this, but we've done it for debits first, and then in my script, as you keep kind of going down, we do the same thing for the credits down below here. I'm actually going to kind of talk through the credit functionality first, because I think that is sort of like a better way of handling this for our analysis. Just keep in mind as we walk through this that we're actually essentially walking through the credit side of it, even though it's talking through kind of the debits here. Okay, so we're summarizing on the journal entry and the account number and accumulating these amount fields to a file called sorted. If, in this case, if the credit value is less than 0, then we're summarizing on the journal entry number to a file called sum file. So the sorted file, like I said, is something where we've summarized on the journal entry number and account number. And then the sum file is where it's just a raw summary of the journal entry numbers. And let's see how, why we're doing that. The reason we're doing that is by summarizing on the raw journal entry numbers, we can count that file and then say the record count, this variable field record count equals count 1. And then we can have, v count equals 1, so that we're going to basically, as we call this other script, we're again the count. So sorry, let me just go to the sum file here. We have 11,564 journal entries. So 11,564 is here in ACL's mind. And in this v count equal 1, that's kind of starting it off. Then it's going to jump to this new script called JE flat script debits while the v count is less than, so v count right now is equal to 1, is less than the 11,564. So we have that kind of working. And so let's kind of go over to that. So we'll go over to this JE flat script debit table as a starting point. And at this point, what it's going to do is it's going to open up the summary file. Again, the summary file is the one that's just by journal entry number, and it's going to locate record number 1. And it's going to say the journal entry number, this variable, is equal to whatever journal entry number is here, which is JE1. So it's going to basically copy that and save that as a variable. So again, the variable v underscore JE2 equals whatever is in that record number 1 field. So that's kind of the first step. It's going to open up the sorted file, which is the summary table on the journal entry in the account, and it's going to extract any information for that journal entry number and account, debits and credits, if the journal entry number equals, in this case, JE1. So that's basically this command right here. Then what it's going to do is it's going to create a sequence number for each one of those journal entries in that particular one. And I'm just, you know what, I deleted the file extracted, unfortunately. What it's going to do is for each journal entry, it's going to extract essentially all of the debit sequences for that journal entry. And it's going to create that file, extract it, and unfortunately I deleted it, or it would be still here and we could take a look at it. But it's going to make a sequence number for each one of those entries. And maybe what I'll try to do is run this again and break it as we go. But I thought it was nice to have all these files to show you. So hold on one second. We'll keep going here. So again, imagine I'm going into this sorted file that we have by journal entry number and account, and we're extracting the journal entry, the account number, the debit, the credit, if the journal entry equals 1. And then we're creating a sequence number to find out, well, how many debit account sequences show up for that journal entry number. And then that's kind of the second thing that's happening down here in the sequence number. And then what it's doing is it's extracting all of those sequence numbers based on that, and it's appending it, mind you, if the record number is less than 50. So there can only be 50 sequences that are available here. And actually, we can at least show you this journal entry account sequence debit here. So that, thank God, we can show you that. And therefore, you can kind of see, for journal entry 1, we had a debit. The debit account was 72,470, and this is the amount. Journal entry 10 was, say, we had 3 debits for that journal entry, which is 1, 2, and 3, and these are the accounts. Journal entry 100, it had 1, and you can kind of notice here how many have 1 sequence, how many have lots of sequences in it. But I stopped it at 50 for a reason, and as I go back to this actual script here, I just figured that when I'm doing all of this cross-tabbing, which we do down below here, as you'll see, all this cross-tabbing, that I didn't want this to go out for too far. I mean, I even asked ACL, what are the limits of the cross-tab feature? And they actually gave me an answer, and I may have it in our listing here, but it was so large. It was something like you could have a record of 33,000 out to the right there. So it really wasn't anything that I was ever hitting the limit on, and there really wasn't a limit on how many columns there could be. But I think it might have been 1,000 columns or something. But it's very rare that you'd have that many in a journal entry. Basically, how many credit accounts would you be hitting? Would you hit more than 100, 1,000, 2,000 accounts in one journal entry listing? And the answer is usually not. But you might have like one journal entry a month that's like your payroll processing, and it might go out for 10,000 lines, for some crazy reason. So I just figured, let me kind of break it at 50. And again, this is where if you wanted to go out to 100 as opposed to 50, all you have to do is change it in that one place. And it shows up in another place later in the flat credit part. But for the most part, that's all we're doing. And this is going to create the debit sequences. Again, let me just kind of go back here. So imagine here we're having, just try to get one that has a lot of, see, it's interesting, there weren't a whole lot that when you looked at it, that there were a lot of postings. You know, it was almost like they had a lot of, you know, debits, but the debit, there weren't a lot of sequences to it. There weren't 20 accounts that they were posting to. And probably, you know, again, I broke it at 50, but when you look through the data, there weren't that many that it was posting to more than, say, 5 or 6 at the most. And these are the 5 or 6 different accounts that it's posting to as it's going through its sequencing. Now, I did this and wanted to show you this in the scripting as we kind of go through each one of these you know, points here, is to kind of turn this sorted file where you have journal entry numbers and accounts, which is kind of useful, but it's 32,000 rows, to then kind of say, well, let me kind of boil this down one step further and more or less summarize it by account and have the first 50 sequences. And again, it's still 32,000, but you could only look, let's say, at maybe the first, if you wanted to look at the first debit of every posting, that you could do that in this particular table. And I thought it was also nice to see how many postings there were per journal entry. It was kind of useful to, at least for me, to say, well, you know, it's almost like as I classify on the sequence number, just to kind of, you know, note this, how many did I have of 1? How many did I have of 2, of 3, of 4? And you'll notice there that there are very few that had more than, say, my gosh, more than 24 postings. You know, it really kind of got down to a point where if you really looked at it, the top 10 postings would get you a lot of the uniqueness of that particular journal entry. And again, use this for whatever knowledge it provides you, but when you're looking at a journal entry file that is massive, I always like to kind of boil it down as best as I can. And this is one way of again, working with data in a way to kind of manage it and boil it down to kind of a different viewpoint. Okay, so let me just go back to my script here. So this particular script is going to kind of run through that sorted file, which is here, and it's going to kind of create that sequence number for each different type of journal entry and general ledger account number, and it's going to only do it for each, let's say each set of journal entries, only up until it gets to 50 accounts, and at the 50 mark it's going to go to the next journal entry number and do that for 50, and then the next journal entry number and do that for 50. And as you see here, most of these journal entries only have 1 or 2 or 3 different accounts that it's posting to. So let me go back to my script. That is the reason why I'm doing this looping script, mind you, and why I'm kind of building that extraction. So once that extraction is built, the only thing that I have to do is say, well, my V count is now not 1, but it's 1 plus 1, which equals 2. And then it will then jump back to my original script, which is the starter script. And let me just kind of go down to that particular one, that step. And it's basically going to this statement going, okay, go back to the debit script while now 2 is less than 11,564. And then it goes back to the debit script, looks at the sum file, goes to JE10, which is record number 2, and it does the process again. And then it goes back to the starter script, goes to this item here, now it's 3, and it goes to the third item in there. And again, I don't want to bore you here, but that's kind of why we're using that looping script. I'm just going to close some of these to make it easier. So it's going to kind of loop through each one of these journal entries and ultimately create a table like we did here in journal entry account sequence debit that has every kind of debit sequence by the journal entry number with that particular general ledger account and the actual dollars that are in the debit range. Then does the same thing for the credits. So now the credits are all listed in this kind of fashion where all of the credits are now listed again in that particular range. So now you have a debit version and a credit version. Okay. So hopefully that made sense, and walking through that example, you know, kind of helps in understanding it. So once it's done, and gone through the debit version of creating a debit file, it then does a similar thing and create the credit version of the credit file. So it's now, the debit version, the credit version. And that was down here. And once it's done with the credit version of the file, so it's going through the whole process here, it then is going to run this final JE flat script final. Now, I have to note this, and I just wanted to show you the set echo on. Okay, so I put set echo none up here. What's echo? Echo means that it won't write what I'm about to do from the echo none down to the echo on, which is way down here. Bear with me, it's way down here. So from echo none to echo on, it is not going to write to this log file all of the activity. And the reason it's not doing that is because I'm kind of jumping back and forth between the scripts. And again, it seems to be, to me at least, the only way that I can do this using ACL right now in building this file that has the 50 sequences by journal entry number. Because I have to do that, it has to go through it like 11,000 times, back and forth, and then it has to do it twice because it has to do the debits to one and the credits to another. So I now have 22,000 sequences of all these commands being processed, and your log file becomes massive. So if you set echo none, it turns that off, and then that way your log file is being hit. Now, you could argue, well, we kind of lost our audit trail then, and we don't have that in our data, in our log file, but these are the things that you sometimes have to give up, in my opinion, and then from that point forward, and by the way, you could comment out what I've done here so that it does create this massive log file. But what I found was that the log file was becoming, 20 times the size of my ACL document. It was starting to become a large file, and there was no value in there. It was very difficult to really see any value within these commands here. So, okay, once all that was done, I then set it back to on, and then I open up my final script. So here's kind of the final one. And in the final script, what I did was I then cross-tab, and this is, to me, again, trying to show you data management a bit, where we go from a sorted file, where it's kind of listed journal entry number account, journal entry number account. It's not as useful, to then journal entry account sequence debit, where you have a sequence number added. It's a little more useful. It's not totally useful. I mean, it's still getting there. It's kind of on its way to useful. And then we build this kind of cross-tab one, which I just need to check. Hopefully I kept it, which we call it the cross-sum credit and the cross-sum debit. So let's open cross-sum debit. Now we will have always 50 columns across. We will then have the debit account, the journal entry number, and then 50 columns across of, where in the sequence did that account number show up for that journal entry. So, 72,470 showed up in the first sequence for debit 1, journal entry 10,000, 10130 showed up 1, again, and it kind of goes through the sequencing. So, again, something to take a look at, a little bit more useful in this capacity than to maybe look at your debit journal entries and looking at it in more of where in the sequence did that particular debit show up in the journal entry sequence. And again, it's a little easier because it's cross-tabbed to see that and make some sense of it. All right. And so what this script is doing is it's cross-tabbing the debits, it's cross-tabbing the credits, and then what I'm doing is I'm running a duplicate command on the debits to say so let's kind of go back to the debits here, for the sequence of debit account and where it's showing up in the sequence, how many duplicates of that do I have in my data? So could it be journal entry 1 and journal entry 10,000? Where is that showing up? And then that is, kind of the duplicate on that. And then I'm running it on the credits as part of a duplicates as well. Once I've done, my duplicates testing at that point, I'm joining it back to the original file that I had that crosstab, and I'm doing it in an unmatched fashion. So in essence, what I'm doing is I'm saying, well, where do I have instances where 61950 showed up in the first sequence of that account number? And also down below here, again, these would all be duplicates. You could see here for these journal entry numbers, we have 10130, and it's showing up in the first sequence every time. These are all duplicates. So these duplicates would show up on my duplicates file when I go to my duplicates file. And then if I join this cross-sum debits to the duplicates file in an unmatched fashion, mind you, it's going to show me the unique debits. So the ones that I have debit accounts that never showed up in the sequence of the first sequence. And then I do the same thing for my credit accounts, where again I look for the ones, so that's my unique debits, but mind you, where this 80911 showed up in the first sequence only once in that file. The unique credits, 10130, showed up in all these kind of sequences, 1 through 7, but that only happened once ever in the file. So again, I'm looking for what's unique in my data, and then I'm joining those two together and saying, if this is my unique debit journal entry file and this is my unique credit journal entry file, what is the uniqueness between both the debits and credits? So I join the debits and credits and get that unique all sequences file as the final. So that, again, a lot going on here. Something where we will be making a video of this particular webinar, and something that when you're going through your own data with the script, you may want to go back to each kind of step here. But again, I wanted to spend a good 30 or so minutes going through the scripts. There's 4 of them here, this very complex kind of concept. But at the same time, I hope you can appreciate all of the different way of manipulating data so that you can get more out of it. Where, again, this was the journal detail file, 110,000 records. I'm boiling this down to say I only have 28 journal entries that are totally unique from an account sequence point of view in my data table. So what the percentage there is like 0.00028, kind of thing. It's ridiculous. So something to definitely take a look at. Okay, well, I wanted to conclude then today, just time kind of running out here a bit, in looking at some of the wildcard searching that you can do within your journal entries if you have an actual list or table of actual words that you're interested in searching for. So, what you're going to need is this word search table and table being searched, and the main thing that's happening, is basically a many-to-many match. But if there's a find within the file, so this is kind of an interesting find statement. So it's just taking, you're finding within that field, which is in red here, but then you're taking another field's value from the secondary table, and that's why I have the word search file secondary table with a period, and then the field name word search field. So those are kind of the key statements that we're going to play through in a second here. But when you take a look at the red flag words, it could be bribe, fraud, plug, net to zero, and when you get that, it's good to summarize that. So jumping into ACL, we do have a script for this as well that you can run. There's a couple of different ones you can run here, but the one I suggest is the text matching script. It's going to say, what do you want to search through? And I'm going to search through the journal detail file. And what field do you want to search through? And in this particular case, let's see here, it's probably, actually, this is a terrible example. Bear with me 1 second. So, yeah, I'm going to close that out, sorry. So I'm going to run this through. I have another table in here that should work called the general ledger table. I'm going to search through a miscellaneous field. And then on the searching on part, I have a table of these keywords called keywords. I hit the OK button, and then I'm going to also search on that field keyword. All right, it didn't find anything, unfortunately, in that data, but this was the table keywords that I used. This is how we searched through it. And the script that I'm going to give you is this text matching script that you can search between the two. And again, because my data is not the best today, it's just not finding too much. Let me just try very quickly here. Yeah, I'm probably not going to be able to, quickly find something that we could search through. But say it was a vendor name, you could look through here for the word plug or net to zero or anything like that that might be in there as well. Okay, so that was kind of the last script that we will get to you, and I wanted to explain it in some way. And I wanted to show this slide, this kind of scoring slide as the final presentation slide, because I still think that all these questions and reports we're running, we should summarize into a bit of a score. And then that score could be a percentage, and then the value of the journal entries could be the actual value bar down here. So, from an access point of view, scattergraphing your journal entries by, score and amount, I still think is a great way to do it. But I didn't see any questions come through, but as we close out today, if you want to post any questions, I am more than happy to answer them. We are going to post this entire presentation up on auditsoftwarevideos.com. I believe many of you are subscribers already, and within a week or so, we do have a bit of a holiday next week, but within a week or so, we should have this whole series of video out there, as well as the data files that you can start utilizing on your own. Watch the video again however many times you want. And also note that we will break it up into a bite-sized sort of format for everyone. And I believe this survey is still out there. I know, it is something that we have been working on for a while, and AuditNet has been tabulating the results of the 2012 Data Analysis Software Survey. Feel free to go take a look at that and fill it out if you'd like, and we'll definitely get you the results. And at some point, I'm sure it'll show up more in a lot of the videos and presentations that we have. But again, just concluding for today, thanks everyone for coming today. Thanks again, Jim, for managing this, and just trying to get done on time. I think we're about a minute early.
Thanks, Rich. Well, I appreciate your presenting this today. I learned a lot about using ACL and how to use ACL in auditing the GL. So hopefully everybody else found it useful. And we appreciate your attendance and your joining us today. And we also appreciate your cooperation in light of the recent storm. And I know that we still have a lot of people that are without power up in New Jersey, but hopefully, they're getting back to normal. And we want to wish you all a great day. And I think Rich has already mentioned that we have the videos available, the vignettes, and this is really something that has been a passion of both Rich and myself in terms of new ways to learn how to use audit software and using ACL and the other audit software as well. So thanks again, and know that we're available for additional support after the webinar. If you need to reach us, our contact information is right there. Feel free to contact us by phone or email if we can be of additional assistance. And thanks, Rich. Thanks for putting this on today.
Great. Thanks again, everybody. Thanks, Jim.
Okay, have a great day, everyone. And those of you that will be joining us today, we have another webinar this afternoon at it starts at 2 o'clock, and that is a free CPE webinar, and it deals with planning for data analytics. So have a great day, and if you'll be back at 2, we look forward to seeing you then. Bye now.